We have been receiving inquiries from customers and subscribers about how to better understand waterfall financial models. In this video, we are going to walk through the single-tier waterfall with catch-up that we created in the last live financial modeling video we posted. If you want to follow along through this video or just want a copy of the model, it is available for free on our website. We will put a direct link to the free single-tier waterfall with catch-up financial model in the description and comments section for this video. Let's get into the model and walk through the inputs, calculations, and outputs. This model begins with the investment structure section, which is organized as a matrix for general partner and limited partner inputs. The first input is for the preferred return. The preferred return is a minimum return that limited partners in an investment must receive before any carried interest can be distributed to the general partners. Due to this, you will notice the preferred return input is only available for the limited partner, as it does not apply to the general partner. In this example, we are using 7.5% for the preferred return. The next input is for the return of capital and preferred return distribution. This input will determine the prorated distribution of returning capital and the preferred return between the limited partner and general partner. As shown in our example, this input will most likely always be set to 100% for the limited partner, as the general partner will typically not receive a return of capital or return until after the return of capital and preferred return is fully distributed to limited partner investors. To recap, at this point in the investment structure inputs, we have told the model how we want the return of capital and preferred return calculated and distributed amongst limited partner and general partner shareholders. The next input in the investment structure is for the prorated distribution of the catch-up tier within the waterfall. The catch-up calculations can vary significantly by fund and can be quite confusing. It is important to refer to the prospectus, private placement memorandum, or other investment documentation to ensure you fully understand and accurately model the catch-up specific to your investment. In this model, we are utilizing a 50-50 catch-up equal to the preferred return. This means that after the preferred return is calculated, we will catch the general partner up to receive 50% of the preferred return, while the limited partner will receive the other half of the catch-up tier. The next input applies to the promote tier of the waterfall and determines the prorated distribution of the promote tier, which is equal to cash remaining after the return of capital, preferred return, and catch-up, between the limited partner and general partner shareholders. In this example, we are using a promote distribution of 75% to the limited partner and 25% to the general partner. The final input within the investment structure section is for the percentage ownership of the general partner within the limited partner. Limited partners typically want to invest with general partners that have aligned interest and skin in the game through co-investment, rather than just gathering fees with no capital at risk. In this example, we are using a 5% general partner ownership of limited partnership shares. We have now concluded the investment structure inputs and move on to the cash flows and waterfall distribution. As a reminder, this model is available for free on our website. A link to the free single-tier waterfall model with catch-up is provided in the description and comments. We also have pre-built models for real estate investments, private equity investments, and business startup that contain dynamic waterfall cash flow distribution calculations with a variety of tiers and the ability to handle many different types of assumptions and investment structures. The final input into the model before we can review the calculations is for the annual net cash flow on a pre-promote basis. The cash flow to be input can be viewed as your post-investment management fees, such as asset management fees, construction management fees, or other fund-level expenses, but before carried interest or promote payments. We will use the pre-promote cash flows to calculate the carried interest and promote tiers. The cash flows you input are used to calculate the pre-promote internal rate of return and multiple of capital. These gross return calculations are useful to see how much drag the promote payment has on limited partner returns. The next section of the model uses the inputs from the investment structure to calculate the return of capital and preferred return tier. To walk through the schedule and calculations, the opening balance is always equal to the prior period ending balance. The accrued preferred return is calculated as the product of the opening balance multiplied by the preferred return percentage. Thinking through this calculation within this model, the preferred return is calculated on drawn capital and not committed capital, and drawn capital can be reduced if there is positive operating cash flow. The drawn capital line within the schedule is equal to the minimum of zero or the negative net cash flow. Another way to think of this is that capital will only be drawn from investors if it is required due to there being no free cash flow available within the investment. If there is positive cash, no capital will be called from investors. The repaid capital line within the schedule is equal to the minimum of outstanding capital, which is equal to capital invested and accrued preferred return, and the maximum of the net cash flow and zero. This calculation essentially repays investors if there is positive cash flow up to the maximum amount of the invested capital and accrued preferred return. The ending balance of this schedule is equal to zero, which is because the calculation is repaying committed capital and the preferred return within the schedule. Once everything has been repaid, there will be $0 owing the limited partner shareholders. The cash available for catch-up tier calculated the amount of cash available within the investment following the return of capital and preferred return payment to limited partner investors. The calculation is equal to the net pre-promote cash flow less drawn and repaid capital to limited partners from the schedule. The catch-up tier in this model uses a 50-50 distribution between the limited partner and general partner for an amount equal to the preferred return distributed to limited partners. You will see that the calculation utilizes the cash available for catch-up to calculate the tier, meaning that cash can only be distributed in a year when cash is available. This tier calculated the catch-up tier, which you will note is equal to the preferred return cash flow distributed to limited partners, but the actual distribution to limited partners and general partners will not be executed until we get to the below return schedules. The cash available for promote tier is equal to the net pre-promote cash flow, less the return of capital, less the preferred return, less the catch-up cash flow tier. The promote tier calculates the cash available to be distributed as promote payments, which is allocated in the below limited partner and general partner return schedules. The limited partner return schedule contains 3 line items. The first line item is for the return of invested capital and preferred return, which we calculated in the first schedule. The second line item is for the limited partner's share of the catch-up tier, which in this case study example is equal to a 50% share of the distribution. This means that the limited partners are receiving 50% of the cash flow from the catch-up tier. The final tier is equal to the promote tier, which is equal to 75% of cash available for promote payment. As a reminder, all of the distribution percentages can be changed within the investment structure section to fit your specific use case. The schedule concludes with the sum of the 3 line items by year to determine the net cash flow to limited partners. The schedule includes the net internal rate of return and multiple of capital realized by limited partners following the various tiers of cash flow distribution between the limited partnership and general partner. In this example, there is 5.34% internal rate of return reduction following payment of the catch-up and promote to the general partner. The final schedule within the model is for the general partner returns. The general partner return schedule includes 3 line items. The first line item is for the investment in the limited partnership. In our example, we utilized a 5% general partner investment in the limited partnership, which entitles the general partner to 5% of the limited partner cash flows. The general partner catch-up is equal to 50% of the deal level catch-up tier per our investment structure assumption used within this example. The promote received by the general partner is equal to 25% of the cash available for promote per the investment structure assumptions. The sum of each year's cash flows provides the net cash flow for the general partner, and the internal rate of return as well as the multiple of capital is calculated. As you can see, the use of incentives, mainly the ability to collect a promote payment through the use of carried interest, allows the general partner to realize outsized returns as they are able to put in a small amount of investment, in this case 5% of the limited partner, but realize a significant share of the cash flow from the investment. This concludes the single-tier waterfall with catch-up financial model walkthrough. We hope that this video has helped you develop a better understanding of waterfall modeling. If you have further questions, please feel free to reach out in the comments. As a reminder, the model is available for free from our website. A link is provided in the description as well as the comments to download your free copy. If you found this video useful, please like and subscribe. Thank you for watching.